Hi, I'm Clarissa Down, I'm the editor of TFR, and I've managed to grab David Hennah here from Misys and Nadine Louis of Swift to talk a little bit further about how the bank payment obligation is gathering steam thanks to the publication of the Uniform Rules of Bank Payment Obligation. David, you wrote the book. What are your impressions on how it's been doing?
Well, I think the publication of the rules was one step in the right direction.
Mm-hmm.
It's a necessary step, an important step, but it is just one step.
Yeah.
The original rules were published by Swift.
Of course.
Swift is not a recognised rulemaking body, so I think it was necessary for those rules to be transitioned into something that has an ICC label on it, to put it on an equivalent level to UCP for letters of credit, for example. But let's not forget that BPO is a new financial instrument.
Yes.
It's designed to support new products, new services, supported not only by new rules, but new messaging standards, new operating procedures, new technology, new everything.
Okay.
And so I don't think it was ever destined to be an overnight success. We're beginning to see some serious market traction now, but I think it's still going to be some time before we see critical mass in the market.
There's been some good deals recently, haven't there, Nadine?
Yes, absolutely. And one of a good recent deal was done, in fact, by with the banks like UniCredit and Bank of Tokyo Mitsubishi.
Yeah.
In fact, this transaction was in replacement of an open account transaction.
Oh, right.
And that's why I think it's really interesting as well. And I think the choice to be made at the beginning of this transaction between the buyer and the seller was to choose in between advance payment in open account or use a bank payment obligation. And there we see really immediately the benefit of it. First, of course, for the buyer.
Better working capital.
Of course.
Yes.
And really to improve the relationship between parties. So this has been really developed in a case study that is available on our website.
I think this is a significant development, actually. It's important that both banks and corporates recognise BPO as an enabler of bank-assisted open account services.
It's not an LC.
And moving away from the mentality that is out there to some extent that a BPO is just a replacement for a letter of credit.
Exactly.
Some sort of, dare I say, electronic or light letter of credit, which is absolutely not the case.
No, there was a robust discussion on LinkedIn about this.
Yeah.
That went on for some 72 comments and still counting. But, so people can have a look at it if they're really interested. But what I'm interested in is the actual traction that's gathering, and the more banks are becoming BPO ready, more deals are being done. Is this mainly the domain of the larger organisations, or are we seeing a bit more interest that might become more of an avalanche of take-up from the tier 2, the tier 3 banks and the smaller organisations, or is it mainly a large company thing?
Yes, of course, in some cases it can be something to consider, because the BPO enables what we call the four-corner model.
Of course.
So that means that the exporter, maybe a small exporter, SME, can deal with its own bank, and on the other side, of course, the buyer will deal with its own bank. And those two banks will communicate through a matching application to do the bank payment obligation and to support this transaction for their clients. So that's certainly an option. We have seen some cases already with SMEs.
Really?
Yeah, we have a case study as well on that. So that's an opportunity and a way to look after probably.
Is that the one in Thailand?
That was one. Also, UniCredit with a SME SME or mid-cap in Germany.
Ah, right. Yeah. That one. Okay, right. Got it.
But I think there are more also, because we don't know always who are the corporates behind this transaction, of course, and some do not want to promote, but we have some names as well available, and that's certainly something to look at when the three-corner model that works perfectly, of course, in some case, is sometimes limiting maybe the possibilities, and for some banks also the fact to onboard all these suppliers can be a heavy process in some case, and in some, to avoid these problems, they could think about using the bank payment obligation in the four-corner model.
Do you think in today's risk climate, there's a lot of risk aversion, there's de-risking going on, how do you see the bank payment obligation perhaps helping towards getting some of the liquidity through to places where it hasn't been going before because they've been so worried about compliance and stuff like that? Let's close with that thought. How it can perhaps solve this problem.
I would say if we look at the bank payment obligation, it's electronic data matching. There is a need for some trust between the parties to use such an instrument because it's not replacing the letter of credit. That would as we mentioned. But if we look at the open account transactions, and some transactions we heard some supplier suffering for delays of payment, for example, then maybe the bank payment obligation is an option to get your payment on time and also improve your forecast and so on working capital and liquidity.
David, last word from you. How's it going to go?
Just last week, Clarissa, you and I were having a chat over lunch, and I described to you the four corners of my roadmap.
You did.
Which are regulation, risk and financing, digitisation, and globalisation.
Right.
And the BPO, curiously, is, I think, uniquely the one thing that touches all four corners of the roadmap.
That is true. Four-corner model.
And I think banks really need to wake up to the fact that it can be used to support a whole range of financing propositions. Nadine has mentioned approved payables in a four-corner model. But it can also be used to support risk distribution.
Yes.
Right? And I think that's very important in today's regulatory climate.
Thanks very much, David and Nadine. That's been very interesting, and have a good day.
Thanks.